Welcome, guys. This is Alex from the Fabulous family. Thank you for joining me again. Hit the like and subscribe button, and let me tell you what the subject for today is. Before we dive into it, I'm not a financial advisor, and none that I say you should take as financial advice. I am not a professional. This is just for your educational purposes only. So today we're going to talk about Elliott Waves and Fibonacci. We already talked about Fibonacci, but you can use these two combined and it works really well. So what is the Elliott Wave? The Elliott Wave is named after Ralph Nelson Elliott, if I remember correctly. And while observing the market, he actually figured out or identified that some patterns just keep reoccurring. So some of these reoccurring wave patterns are called impulse waves. The other one is the corrective waves, and we have a third group which is called the complex waves. And today we're going to talk about the first two, the impulsive waves and the corrective waves. All right. So first, I want to show you that without any price action, just to explain. These waves are called the five waves of the impulse wave theory. Three of them are impulsive and two of them are corrective. All right. So wave one is a impulsive wave. And then you have wave two, which is a corrective wave, and so on. Yeah. So the third wave, which is the second impulsive wave, and then you have the fourth wave, which is the second corrective wave, and after that you will have your third impulsive wave. All right, so after this impulsive move, typically we'll have our correction, the correction down, which is called the ABC wave. This is the wave A, wave B up, and wave C down. Yes. So what does it look like? A head and shoulders. So if you see a head and shoulders, you know we're probably going down. Okay, but that's on a different video. So let's talk about these impulsive waves. So what are the rules? All right, first rule, the first corrective wave cannot retrace 100% more than the first wave. So let's say you have identified the end of your first wave. The corrective wave cannot go below the first corrective wave, the start of the first corrective wave. So it must end above the starting point. Typically, this one ends at the 0.618, which is the golden ratio. All right. The second impulsive wave typically goes to the 0.618, or it could even head up to the 2.618 ratio. Wave 3 is always the largest impulses waves. Yeah, and the second corrective wave, if wave 3 ends at the 1.618, typically bounces from this level, which is the 0.21. Let me just highlight it like this. 1.27, sorry, and it will bounce, head back up to the end of the third impulsive wave. Well, how to measure this one? You can measure this one by drawing another Fibonacci retracement, and could either, go to the golden ratio again, a little higher as well, and whereafter the corrective waves will commence. So let's just delete this for a second. Yep. And head over to Bitcoin. Beautiful chart. Well, we know that we have an all-time high of 64 something. So TradingView, work with me here. That's all, yeah, white, so you guys can see we have a bounce on this level and another resistance, or right now acting as support level. Also, we know that the current uptrend started in the crash of March last year. So let's see. Let's draw some fibs. Yeah. So let's take this level right there, approximately, as the end of wave 1. Then you will see, if I change the color, right, so yes, and let's delete this one. Then you will see that the retracement went back to the golden ratio almost, and the second impulsive wave went to the 1.6 golden ratio. So we have learned that the first impulsive wave goes from 1 to 0, typically gets retraced to the 0.618, and the second impulsive wave would be to the next golden ratio, gets retraced, and then head back up. However, this move failed, as you can see. So how can we spot the reversal? Because Elliott waves, can be invalidated midway. Yeah, it's not like, well, we had wave 1, so wave 5 must be completed eventually. No, they can be invalidated. So we can draw a trend line, yeah, like this. Let me just make it right, like this. Beautiful trend line, and it gets broken down. Okay, actually, it's kind of a rising wedge. That's a rising wedge. It gets broken down. Okay, so it drops below this level. No problem. All right, that's not a problem, because as the first corrective wave could end lower, so can the second corrective wave end all the way to the Fib 1 level. So this could also be an Elliott wave that would still not be invalidated. But as you can see, it dropped lower. So let's delete this wave right there. And let's place this in the middle. Oh, so, all right, so the the second corrective wave could bounce back to this level and go into its last impulsive wave. No problem. All right, but this didn't happen. So what happened? Well, let's draw another fib. Let's take this low to the, I'm sorry, I think I did it inverse. Let's take this high, yes, and go to this low. What do we see? Let's delete this one. We see that the price dropped to the 0.61 initially. Let me zoom in right there. Initially, oh, yeah, the box. Initially, it dropped to the golden ratio, bounced back up, got rejected, and went down to the 0.5. Interesting, interesting. So, and actually, if you would draw another fib, because right now, let's say we're here. We know it bounced, so where will it end? We want to know how, where this wave will end. So let's take another fib. Take another fib. Draw it like this. And we'll see, what do we see? First, let's go to settings, price on the right. Great. What do we see? We see that the price went to the golden ratio again. And then another drop started. So we see a change in trend. Yeah. So let's say the first trend, the major trend up, was like that. Okay. And right now we see this trend and then the trend down. Okay. So we see a change in trend. So we know that this would be our take profit area because it's the golden ratio. All right. It would be our take profit area. So right now we're here wondering, okay, will the price go back up? Is this just a corrective wave going into the fifth wave, or will we go down? Well, always have a plan A and a plan B. So let's say, because we drew this right here, yeah, and let's say we think that the price might be doing this, then this would be your target. This would be your next target. However, Bitcoin failed the impulsive way and went back down. So let me go back, delete this one, take another fib, now draw it like this, because we know the top of this wave up. And what do we see? What do we see? Well, we see that the price bounced back to this level, almost going to the second fib ratio, yeah, but ended a little higher. So I'll show you a little trick. Let me first delete this one again. Show you a little trick. Let's do this one. No. Let's add some minus levels to the settings. Let's just add some minus levels. Minus 1, where's my minus? Minus 1. Great. Yep. And yeah, that's okay. Minus 1. Well, let's do this one as well. Boom. So, as you can see, yeah, drawing a fib based on this move, adding some minus levels, we see that the fib retracement actually tells us approximately where the price will bounce from. All right. So this is a very handy tool to use. So like I said, we have our impulsive waves up, but also down. So let's say now we're here. You draw another fib. You draw another fib like this. Yeah, like this. So let me just erase the background because it's kind of annoying, right, guys? Like this. Okay. So we see major movement down and a major move up. All right? Major move down and then a major move up. So what are the rules for the corrective waves? Well, typically you have wave A, it ends, and wave B will be to the golden ratio. Yeah? Some people add another level to this. Oh, excuse me. And it will give you a golden pocket like that. And as you can see, if I draw my fib just right, the price ends above the golden pocket. Yeah, you see that? You know why? Because they're trying to trick you. Yes, market makers are trying to trick you into longing, because you might think, well, we need to get past this level. Oh, we passed it. Boom. Yeah, you lose your money because you longed this area. So always wait for confirmation. That was a lesson within a lesson. So what now? Typically, wave C, yeah, would be like wave A. All right. so down. So let's draw our waves, our corrective waves, our major corrective waves, like so. All right, so let's say wave C would be as lengthy as wave A. Then you would have something like this, ending in, well, November. And what's the price actually? 16K, something like that. Yeah, approximately. All right. And as you can see, 16K is actually a support level. Wow, amazing. Like so. Let's see what it does over here. Nothing significant, but right here it acted as support. So it could be a level to look out for. All right. Another way, let me delete this fib. Another way to see where the price is going to is take the swing low, the last swing low, and the last swing high. And we'll add this one back again. And it will give you another level, like so. But we know we have different levels as well, like this one. Oh. Hey, bear with me, guys, bear with me. Okay, it's not working like I want to. Strange. Yeah, okay, thank you. Boom. So, another level, right there. And lo and behold, that's another support level. Yeah, interesting. Very interesting. Okay, so what if we do this then? Take the major movement. I think, yeah, right there. Let's delete this one for a second. Boom. Let's take the major movements. It will give you a very low one. Let's just make this a different color. Okay, let's make it yellow or something. It gives you this level, also an important level. And we can even add the one in between, which is this one. And it's the same, almost the same as the Fibonacci level from the previous fib retracement, as you can see. See? So, if we are in a downtrend, yes, and if we are in a bear market, these are your targets right there. Yeah, so look to your right. These are the targets. Draw your fibs. These are this one right here, the yellow one. Let's make it red because that is the worst case scenario for me. Boom, worst case. Let's say medium, worst case. Yeah, so let's make these orange, like so, and this one yellow. All right. So if we're going down, guys, these are your targets, and this one would be actually also a target, but less severe as the rest. Okay, so these are your targets. Okay, so let's hop on to the lower time frame. Let's delete. Oh, let's delete this one and this one. Oh, okay, let's hop on to, let's say, the 4 hour. Yeah, beautiful. So, who can spot the first impulsive wave? This one. First corrective. And then, where does it end? Well, let's use our fit. We take this as wave 1, and we take the low, and what do we see? We see a beautiful chart. It's actually to this level right here. Yeah, beautiful. 1, 2, 3, and this was 4 actually. 4, yeah, to this level. You see that these levels just keep popping up. This one, yeah, also these two. So these are your most important ones to look out for. So let's see where the price would have gone to if Bitcoin didn't break down. Okay, let's see. Ooh, it could be all the way over there. Well, let's add some levels in between. Yeah, because we're not complete moon boys here. So 55. Okay, this are actually almost 56. So this would be an important level of, or would have been. And I know that 54 actually, let's hop onto the daily very quick. Pop, pop, pop. Where am I? Oh, right there. I know that this candle right here, this candle right there, yes, is a vector candle. For the guys who know what a vector candle is, good job. For the guys who don't know, this red one candle, yeah, is a vector candle that needs to be retaken by market makers because there is a lot of liquidity right there. How do I know? Well, I use the Trader's Reality indicator. To know the specifics, I will make a video on it. Or you just go to the YouTube channel Trader's Reality because he's the guy who made it. Okay, so this would have been probably the end target. However, it's not. All right, it's not. So before I delete this fib, do you see how important these levels are? Yeah, the corrective wave ends within the golden pocket with the 0.61 as bottom. For the guys and for the brothers and sisters who saw my Ethereum chart, I explained that this is your initial buy-in, this is your take profit, this is your buy back level, and the 0.618 is your take profit, and this would be your buyback level again. See how that works? You see how that works? Yeah, it's actually, if you get the hang of it, it's a great trading strategy. Yeah, but you just need to know in what kind of market you are and what kind of momentum you are, and then you know your levels. All right. Okay, so this move failed. Okay, this move up failed because actually it's still a wave 5. It's still a wave 5. Yeah. So these waves, for me, it's completed. It's completed. Why? Because this move down, guys, this move down, okay, just invalidated a further move up with this wave. Okay, for me, it invalidated it because it went below wave 4. So now we need to look at the correction waves. So we know that this one was the first first wave, okay, which is just straight down. So actually we need to hop on a lower time frame, 4 maybe, or 1. Let's go to the 1 hour and let's see what we see. Okay, let me delete this fib, otherwise we get a lot of fib clusters. All right. So I left the accuracy right there. So yeah, perfect. Okay. Let's delete this one. Okay, so we have our wave down. So what we want to do? Well, we know where the wave, the first correction ended, which is this one. But this wave up started at this level. So we draw it like this. And let's make it a little bigger. And you see that it almost went to the golden, ratio. So let's see what happens if we draw it the other way with minus levels. Yeah, just, guys, experiment. It's quite fun. This one, minus, yeah. Okay. Oh, no, that's not the minus I want. I want this one, I think. Ooh, look at that. Yeah. So you can also do it this way, and it will give you the same target. All right, almost the same target. So yeah, this was an important level, guys. Very important level. Okay, so what have we learned? First, corrective wave down. Now we identified the bottom of the first correction wave, so you can draw another fib, and we add this one back again. So this is the level to watch out for. Okay, this one. Okay, so why that one? Let's go on to the daily. All right, and draw it the same way. So what I did on the lower time frame, I'm doing right now on the smaller time frame. And what do we see? We see that the price retraced back to these levels. Yeah, these levels. All right. So let's add that back again. Let's go into the smaller time frame again. Right. So let's delete this one. All right. So what can we expect? We can expect move down, move up, move down, back down. So let's assume this wave is not done. Yeah, the wave A is not done. Because as you can see, it went back up. So there are waves within waves, right? Like this. Let's make that a different color. Like that. Yeah, there are always waves within waves. Or maybe you can draw it like this, ignoring this strange leveraged trading wick. And it would give you this target. And then the move up to these levels, yeah, convincing everybody we're going back to the bull run. Okay, that's my bias. Yeah, I don't want to have anybody to be that easily convinced. All right, it will probably wick a bit above, convincing everybody, well, this move is done, we're going back up, but that's just not how correction waves work. Oh, deleted the wrong one. So where would this wave end? Well, we have a few different corrective waves. We have this flat ABC, which is this. We have the zigzag ABC, which is this. And we have even this one, which ends higher than wave A. And this would be telling us that the trend has changed or is about to change because it's a higher low. Yeah, it's a higher low. Okay. So let's delete this one, do the inverse again, and let's see what target it gives us. It gives us these temporary targets. Let me do this. It gives us these temporary targets, all right? So these are targets to watch out for. For me, it could go to this level right there and bounce back up. And we would have a bigger Let's draw it like this. A bigger Elliott wave. Yeah, could be. So, like I always say, trade the ranges. Trade the ranges. Because as you can see, this move down can go all the way to 34 and not be invalidated. Okay? So keep that in mind. All right. So that was the explanation on Elliott waves and Fib retracement tools. I hope you liked the video. Like the video, learn from it, practice yourself. All right, guys. And show me on Telegram what you made, what kind of charts. I'm very interested in your beautiful, beautiful charts. Everybody has his own way. And let's just learn from each other, guys. See ya.